My name is Aaron Pearson, and I'm a brand and communications consultant for B2B tech companies. And the topic of our panel discussion today is scaling B2B tech companies in the Heartland. I put this panel together because, I think we're all here out of love for both B2B tech and the possibilities of transforming industries through technology, as well as for the Twin Cities and the Midwest and growing businesses here. And being here presents some unique challenges and opportunities. Would love to learn from our panelists what some of those are and how they're working through it, and as well as what it means to just kind of power through sort of those scale up phases of their company's growth. So, one of the things that we haven't had a lot of, for example, in the Twin Cities, is a lot of, unicorns, tech unicorns. Arctic Wolf, for example, is a rare standout, says it can be done. They actually moved their headquarters from Sunnyvale to Eden Prairie on purpose. So it's like, what are some of the possibilities there? They saw a lot of things for the good that helped them make that decision. So I'd like to start by having our panelists introduce themselves. So we have a couple of founder CEOs with us today, as well as a VC who's been there as well. So why don't we start with Cora Leibig from Chromatic 3D Materials? Sure.
So my name's Cora Leibig. I'm a founder and CEO of Chromatic 3D Materials. We were founded about 2016. It's been running about 9 years now. We specialize in industrial 3D printing, delivering the materials and the printers that manufacturers need to implement additive manufacturing in their production. My background, how I got here, I actually moved here from Texas for a startup back in 2008. So that was a materials company. I've been in the materials industry my whole career. Materials industries are notorious for not doing startups. So gotten a lot of experience in how to pivot how to tailor a small business for a large industrial application. And background before that, grew up in the New England area, and went to school at MIT, so have a really good sense of what some of the, let's say, startup rich environments can look like. But I'm happy to have my business here in Minneapolis. So,
I'm Sonny. I'm the CEO and founder of Fulcrum. We're an operating system for manufacturers trying to digitally network all the manufacturing in the world together. We were founded in 2020, so it'll be 5 years now. Half our team is here in Minneapolis, the other half is remote, and we're happy to be here as well.
That was a great, concise intro.
Scott, you've got a couple of phrases.
I'm going to follow that example. My name's Scott Burns. I was born and raised in Duluth, and I've spent most of my life now in St. Paul. I started started as an entrepreneur in 2000 in the St. Paul basement with a company called Gov Delivery. So if you've ever gotten digital communications from the government, probably came through Gov Delivery. We built that up to 250 people just a couple blocks from here, and sold it. And it ultimately merged with a smaller company and became a unicorn. I wasn't on the cap table anymore, but it's sort of a almost example of getting to unicorn status from here. And then started a company called Structural in this build. We were the first tenant of this building that we ran for 5 years in enterprise SaaS, and really just developed a strong belief in almost the topic of this session, that you can do world-class B2B really, really well from this region. And so just over a couple years ago, I joined Mars and Power Venture Capital. Mars and Power is an $11 billion asset manager, just a couple buildings over, and has been around for almost 100 years. And the firm wanted to get into private capital. And so launched a VC effort. I came in about halfway through sort of the first stage of that effort, I guess, 2 years ago. And we've built something really with a focus on B2B type companies, what we would call tech and tech-enabled firms that are expertise-driven. They're disrupting industries disrupting markets with real expertise. And that allows us to invest in B2B SaaS, but also a virtual sleep clinic, a finance solution for CPG called Lunar Capital, which some of you may have heard of in the North Loop. And we've ended up doing 18 of those. We invest in the Upper Midwest. Our investment strategy is tailor-made for this region, we think. We've done 18 investments, and it's primarily here in Chicago and then a little bit of Wisconsin. We're about to do one in North Dakota, we hope. And I think that covers it for now.
Beautiful. Thanks, Scott.
Not as good as Sunny, not as concise.
Yeah,
Sorry,
well,
I'm old.
you're in a hurry growing things. So I'd like to maybe start positive and talk a little bit about strengths of that the Midwest region and the Twin Cities in particular have been bringing to the table specifically for the companies that you are busy growing right now, and Cora and Sunny. And so, one of you are in really an IT company and one more of a call it hard tech, I guess, right, Cora?
Yeah.
And maybe you want to start with you, Cora?
Sure. I mean, I think one of the advantages for the Midwest, in particular for deep tech, is the engineering base is really solid. You can find a lot of talent who have a lot of experience in a lot of different sectors, whether it be industrial, medical, et cetera. The education base is strong, the management base is strong. And so I think that's number one, 2, and 3. When you're building a startup, it's all about the people, and you can find a good team here. I think another advantage is the lease rates are really fabulous. So if you think about it in terms of if you're thinking about the cost structure of your startup, you're trying to stay really lean. If you compare lease here to any of my colleagues on the West Coast or on the East Coast, it's staggering. I can get 5 times as much space for half the cost. So it really changes the cost structure and how you're able to focus the funds towards building the business. So
it's cold here in the winter, so people work more, I think. I actually think that's true, but maybe on a more serious note, I think that what we're trying to build at Fulcrum is we talk about it as being a generationally valuable business. Like, we want it to be a thing where when we're all retired and on our deathbeds, we know that we've built something that's still valuable somewhere in the world in a meaningful way. And in order to do that, you have to have this really long commitment to a long-term goal. It's not something that's kind of a flash in the pan. If you look at the average resume in Silicon Valley, people don't stay at companies for more than 2 or 3, or maybe they get their full vesting schedule and then they're out. And I think people here are much more interested in something that's real, that could be long-term, versus just having an index fund essentially of all these different pieces of equity from all the different companies you've been to. And then I also think that, I think hiring people is always really, really difficult. But for us, the culture is really important. We're working with manufacturers. They're actually really smart people. They're really rich. Usually if you have a $10 million manufacturing firm, you're making a lot of money, more money than most investment bankers that you know. And so there's this kind of weird thing where they're more wealthy buyers. They have economic power. They're smart. They're mechanically minded. Even if they don't have fancy degrees, they still know quite a bit. And there's a lot of people that we've hired that were really, really smart, really good people from Silicon Valley, but just could not appreciate the value or the culture of something that's different. And so we've long believed that we need to hire really great technologists, but we're working with an industry that's not the same. And so how do you hire people that are willing to bridge that cultural gap? It's like a weird, nuanced thing to say, but I think the people here in the Midwest and Minnesota are much more hospitable to other cultures. Yeah. And that's, for us, very important.
Well, Scott, you've seen this both from being a leader of a company yourself, as well as making decisions about the companies you're investing in. And I know you're a huge cheerleader of St. Paul here too.
Yeah, I mean, I am a cheerleader of St. Paul. I'm not one of these people who was born here and hates Minneapolis, just to be clear. If you see me over there, it's by choice. But on the positive sides are dramatic here. I mean, first of all, Minnesota has really one of the best economies in the history of the world. And I think that is just something to sit in for a little bit. We don't talk about it. It's hard to even absorb how incredibly powerful this economy is. You have all of these big companies. You have what's spun off into the second tier of companies. You have a quite vibrant startup ecosystem, even if it's not everything we all believe it could be. And it's extraordinary because it goes across financial services and agriculture and retail and med tech and on and on. I mean, really, anywhere in the world, just about, would look at this economy with envy, at least in terms of parts of it. And so how does that affect startups? I was dumb enough to start a gov tech oriented startup here. That actually makes no sense at all. So I'm not going to stick to that example. We made it work. We made it work by flying on airplanes, and we did pick up a few really great local clients. But I think what I see as being powerful is that investment and expertise that people make over time. So Sunny made the comment of, it's more important to be in person with people now than ever before. In economy where some level of expertise is at our fingertips all the time, we need people who are willing to invest decades in expertise to make change in this world. And there's a lot of that here. It's sometimes sitting at Optum or Piper Sandler or 3M or second tier, supporters of those companies. But there's a lot of expertise in this market. It's a state and an area that really values education and taking time with things. You see computer science degrees proliferating now, and I love that. So I think talent, I think transportation matters a ton. I had a huge operation in the UK when I was running Gov Delivery and DC, and we could get there in a heartbeat. I could do day trips to those places. I've done day trips to meet with LA County. I mean, it's unreal how efficient it is to be in this market. And that is a real appeal. And then I think, I do think back to talent, I really appreciate not just that people are willing to invest in themselves before they get to me, but the diversity of talent that you can tap into. So if you have a company, on this block, like I did, you can hire customer support professionals who are maple syrup farmers on the weekend in Wisconsin. And you can hire designers who are artists from the North Loop and from Loring Park, and that they're coming in to design. And I found that to be extraordinary, even when we're not talking about technical expertise and other expertise. So there's a lot to lean on here when you're trying to do something extraordinary.
I'd love to hear your perspective on one thing that has been a challenge about being here for you and your organization, and how you have managed that challenge. Cora?
So I think one thing that's challenging is, and this is probably worth touching on, kind of knowledge of equity packages for new employees from a talent perspective, is kind of valuing the equity packages that you can bring. So that comes with a little bit of security, sense of security. I think on one hand, you have a lot of people with a lot of experience, but on the other hand, they usually are not prepared to take much of an equity package, or to value the equity package in replace of salary. Like that doesn't really happen here. So that's something you can get in other regions. Occasionally you'll find someone who says, forget the salary, just pile on the options. But that's the exception more than the norm here. So I put that in as one downside. I don't think it really hampers what you can do, because again, it comes back to, do people stay for a long time? And they do have a lot of staying power. And I'd rather have employees who stay than be able to overcompensate them with stock options. So I prefer the staying power over the risk aversion, but that's what I'd say.
I think that our culture here is like a narrow band of expected value. Like, we don't dream very big, and we also really don't like to fail. We'd rather have like a low, medium, moderate outcome. We don't like. I think that's pretty good. Pretty good is better than failing. That's shameful, but what? Don't $1 trillion. That's crazy, you know. So I don't think the world works like that. I think that the things that change the world and move the world, even the companies that are here, like Medtronic or like 3M, a lot of the things, even something as simple as a Post-it note or a pacemaker, these are not middle of the road expected value decisions. These are go boom and save a bunch of people's hearts or kill a bunch of people by accident, potentially as well. None of the things that we've actually done here historically have been that's created value here fit in that profiles. But I would say that that's the biggest challenge. People that otherwise are extremely talented don't want to take risk. And the people that do want to take risk dream very, very small. And I've always been told that the marginal difference in effort to do something that's worth $1 trillion versus $1 billion is not, 1,000x. It's like 20% more. And so I think that even the effort that we could put in a way that would be a lot more fruitful if we thought a little bit differently.
Scott, you were at Star Tribune's True North conference at True North, right? Conference on Tuesday. And, you posted and talked about former Michigan Congressman Peter Mairs sort of talking about the Midwest sometimes won't get out of its own way and, trying to compete against, say, the southern part of the United States for business. And we want to be a place that welcomes growth, change, investment, innovation. And that there's a lot that's changing in the world right now that maybe we need to wake up and capitalize on. You reacted to that. I mean, that resonated with you in some ways. I wondered if you could maybe share your perspective on what.
Oh my God, I wrote that this morning.
Oh,
haven't really thought about it. I didn't know I'd have to defend it right away.
it is social media.
Yeah, I know. No, it's good. If you haven't, this Star Tribune event, which wasn't coordinated exactly with Startup Week, but happened on Tuesday, was really extraordinary event. I hope more people will join next year. It's kind of our own mini ideas festival, cultivated speakers and things. It was really something. It was fantastic. So I'm still thinking about it. So this congressman is a Republican congressman from maybe Oakland or Broomfield Hills or Broomfield something, Michigan. I think just was calling out the fact that it can be in heavily regulated areas, places that have values that I generally align with on the environment and other things. We think we sometimes allow a small constituency to protect something, but maybe take a short-sighted view. He used the example of a pipeline. People don't want the pipeline at all, so they don't let us work on the pipeline even and fix the pipeline and make it safer and better. And I think that is a problem in heavily regulated areas. Minnesota is actually a little bit of a version of California and Massachusetts, kind of plunked in the middle, the Midwest. And that's been a strength for us when it works. When we do approve things, we take a little more thoughtfulness, but we still approve them. When we spend a lot of money on schools, but make them work, when we build the light rail and make it work, and a 10-year-old can ride it like they can in Barcelona. And I guess my criticism, this is kind of, along the lines of the Abundance book that a lot of people have read, that's got sort of mixed reviews. But I think that our future here requires not just doing stuff that we think is important, but doing it very, very well. And I think we're blowing it in public schools, and that's the most important infrastructure of all. And that is the fault of people who care the most about public schools are blowing it the most. That's the amazing part. Who care the most about transit are messing it up the most. Care the most about the homeless are messing it up the most. So I think he was challenging us to say, why can't we build here better? And if you can't, people are going to go to Ohio and Texas. And there's a head in the sand thing happening right now where people are like, nah, nobody's moving out of state. Oh, people are moving out of state fast. We've always said they aren't doing it for real, but it's really happening now. And so that's just something to be aware of. You need to be good at everything, because otherwise this place is just a cold flat place without mountains or ocean. So we gotta hit home runs, not singles.
And if I can add
Yeah.
on that a little bit, I've been working recently on federal lobbying efforts, and the stats for Minnesota are not good, and like we're one of the lowest of all the states in terms of bringing federal money in. So it's like the delta between the money that goes out from taxes and the money that comes in. We're one of the worst, and it comes down to us. It's interesting. It comes back to um, the Congress members or reps not necessarily dreaming enough that the constituents going to the reps aren't dreaming big enough. Like, hey, we could build, a defense thing here. And if you compare that to the South or to Texas, that's they're getting a lot of industrial money there because they're helping to build some of the defense infrastructure that's necessary, and they're lobbying to get the funds from Congress to their states. And that's something we could do a lot better at. But it comes back to what you were saying, like you got to dream big. Doesn't take much effort to turn $1 billion idea to $1 trillion idea, and so I think it's an important thing that we need to get better.
So, Cora, I'd like to drill down just a little bit more on what you're trying to do there with your own company specifically, because Chromatic 3D is in a business where scale 3D printing, additive manufacturing in general for production purposes is a scale business ultimately in terms of really making things work. And you're increasingly focused on a government opportunity, which is a bold move for any startup company to pursue. Maybe Terrell, talk a little bit about.
Sure. So I mentioned that we're focused on industrial markets, and coming back to B2B, one of the challenges with B2B and industrial or manufacturing type markets is that they are slow to change. And so one of the things that we've learned, and if you've been running a startup for 8 or 9 years, you have to learn a lot of lessons. That's where they keep talking about grit. This is where that comes in. So in what we saw is that we had we've touched at least 200 customers who were really interested in what we were doing, big markets that they were touching, but the conversion rates were just so slow because of the approval times and things like that. So we had to really take a hard look at product market fit and look at where our tech could really hit a market that needed something now. And so over the last year and a half, we've been working on a pivot to 3D print rocket fuel. So it's the propellant that goes into rockets. And we're getting contracts with the Navy, the Air Force, the Army, working on things like, right now it takes about 2 years to make a rocket. And we think that should be a lot shorter. So we have ways to cut that timeline by about 5x, and also extend range for rockets, which is also super important, by about 30%, which is a world where they usually look for 2% increments. So it takes a lot to make that happen. I mean, and even though there's a screaming need for it across the DoD, it still takes time to, especially you have shutdowns and things like that, but takes time to really make that pivot happen. It takes the confidence of your investors. So I think we talked about risk aversion of employees. It's even more important to have an investor base that is not risk averse. Because they have to have confidence and faith in you as you're making those transitions. So that's an example of kind of a big swing that we're taking, and we're able to leverage all of the technology we've been developing for industrial tech. It all fits right into what we need to do for propellant. So yeah, that's one of the things we're working on.
Yeah, it's exciting, really cool stuff. So, Sunny, you talked a little bit. So you were on a panel you had a session a couple days ago, and you talked a little bit about early fast growth. Going very quickly from 10K annual recurring revenue, $1 million to 2.7 million, and you had some learnings from that in terms of the fact that you actually felt like you grew too fast at in some ways. Can you maybe share just a little bit about that with everyone?
Yeah, I think maybe a better way to say it is we grew too fast for how mature I was or we were. I think there's a lot of different components, but the first is just it is really exciting as a startup if you find something that you can sell. It's really nice when people want to buy it. When back in those days, people were buying our software 30 days after they met us, and this is a full rip and replace software. We got to take all your software out and put new stuff in. And our investors are like, "Wow, this is amazing." We're like, "Of course, we're amazing." And turns out we didn't actually know how to make it happen consistently all the time. And there are other things too. Like we learned that you can have a really innovative component to what you're doing, but each and every industry, and it might not actually be cleanly sliceable by aerospace or whatever, has a bunch of other little boring, stupid stuff that startup employees don't like to build that you have to do in order for the more mature, larger, richer companies to actually use it. Little things like auth to big things like Sarbanes-Oxley compliance to other random stupid things like just being able to understand that there's 7 different formats of PDFs that all have to be rendered in different ways. And all that little nuance just doesn't feel like the same dopamine hit as releasing a really cool feature that everybody wants. And yet, if you look at it, it's all that work that's necessary to do. And we didn't have the maturity to, we had the money raised, but instead of building all those things, I allocated resources to more cool new things. And then you can just imagine all this debt, all these cool new things that all each need their legs. And now we have like 50 things and no legs. And that's what happened to us. And I think that another founder or another version of me that was wise enough at the moment could have continued to triple and quadruple. We tripled in 6 months. I think, reasonably speaking, there's a company called Ramp. They sell credit cards. And they've been able to 5x year over year for the first 5 years of their business. They're at $1 billion in recurring revenue now, just 5 years in or 6 years in. They started 1 year before us. Their SDRs book $1 million in pipeline a month, easy. And I think that founder had a lot of other experience. I always hated being called a first-time founder, but there's a reason it's a little derogatory. But there's some version of me that could have realized what to do in the right order to continue that growth. The opportunity was there, but I made the wrong choices.
One of the things, Sonny, that you've been able to do lately as a company is grow well and actually with fewer people than you thought it was going to take when you did your last VC round. And it seems like a big part of that, though, actually is how you approach, hiring people. Can you talk about, what you're looking for in the people that are ready to go on this journey for Fulcrum right now?
Yeah, so we've almost 4x our business in the last 2.5 years, and we only have like 4 more people than we did. So we went from like a 51-person team to a 55, 56-person team right now. There's a couple members of my team back there, and they're very stressed out. They're doing a lot more now. But I would say there's 2 components. I think one component is like the 2-minute or like 4-minute mile or 2-hour marathon thing. Until you see somebody else do it, you might not know it's possible. And that's the whole ecosystem. This is not an offense to VCs, but most VCs have a spreadsheet where they're literally trying to predict the field of, are you going to make the money or not? And there's a bunch of variables that go into there, your growth rate, and everybody assumes the growth rates are going to decline over time, and what your revenue is per person, and all these kind of proxy stats that ladder up to what are you worth and how can I get a deal buying parts of your business. And embedded in those sheets, I think, are some false assumptions. Every one of the VCs that I've ever worked with, they want you to build your assumptions on what you can do based on, well, no one really sells more than $150K a quarter as an AE in mid-market. So you're going to have to hire this many people to get to this revenue target. And I think that assumption is just absolutely wrong. And I met the founder of Ramp, Eric Lyman, and he was like, you think first principles about every stack of your business in the product side of things, but why aren't you thinking about that? What are the physical limitations that say you just can't sell more than $150,000 a quarter? And it's not true. Like physically speaking, you probably die if you had to sell more than 3 million a quarter, but that is 20x more than what these targets are. So I think the first thing is just like, what is a person able to do? And if they're able to do more, we can compensate them better. And if we can compensate them better, we can get better people and they can stay longer, and all these things start to happen. But it really starts with somebody at the executive level saying, here's a target, and we feel bad. We don't want to give people targets they can't hit. But just pushing that understanding of what are our physical limitations and how do we open them up. One of our A's sold 370K this first quarter, and she sold 125K 2 years ago. She's the same person. She's learned more. The product's better, but just things like that. And we think we can do a lot more. I think on the people front, once you say that our goal here is not to provide you with a safe, steady job that's going to be the same every single day, 80% of the people run away. And then of the remaining 80%, if you say, when you hit your targets, we're going to move the bar meaningfully, another 80% go away. And then when you say, even if we succeed, we could still fail because it's a really complicated machine, then almost everybody else goes away. And then what you have left at the end is the pain that you're avoiding in terms of rejection. We don't like being rejected, but you have the gold, which is the correct people for your business at that time. So that's how we think about it.
Scott, what are you seeing with the companies that you're working with, changes in how they're looking at how they're hiring and approaching the right kind of people to take them through that growth phase?
Well, I think it is really tricky here. You talked about the ambition issue. It's the same thing when you're a VC here. There is sort of like the richest person in Egan problem. Like if you're in Marin County or whatever, there's just a natural gravity towards like 10xing everything. Because I mean, I have a friend who got $3 million check in a solar business out there, and he's like, after taxes, I paid off one house, and slightly upgraded. It's rough. Here, that's an amount of money that, you can retire on if your spouse works and whatever. I mean, and that doesn't work for me at all. Like our model falls apart. If we've invested in an entrepreneur who's satisfied making a couple $1 million, we will fail guaranteed. And so it's just, it's tricky from an investor standpoint to make sure we're identifying people who are either really motivated by a big payout, motivated by legacy, motivated by a problem, or just have demonstrated in their life that if they reach the goal, they set a new 10 times harder goal all the time. That could be an athlete, a musician. It could be from their experience in the Peace Corps, could be from another deal. We could just be guessing that they have it inside them, which happens sometimes. Anyway, when you're scaling, the things we did that worked the best, some was purposeful and some was by accident. We started with 2 Minnesotans. Both of us were athletes. We had gone away to school in Vermont. That's actually where we met, racing full-time, ski racing. And he made the U.S. ski team. I pursued skiing, not quite at that level. And then we came back here and we had a business idea, and we both know each other are hardworking from that experience. So we kind of off to the races. We found somebody who was a West Point grad and very ambitious, but wanted to direct it in a new way, to be our operations person. And that was all very lucky. I would say as we didn't have that takeoff that you had, we kind of went slowly. And then you start to attract people who like this, unfortunately. So the best thing that happened to us is when the DC office started growing, we were hiring very ambitious people. DC is filled with ambitious people. The most ambitious kid from Duluth growing up either lives in DC or California now. And the fact is, those people brought a lot to our company, and culturally intermixing with the Minnesotans sort of pushed. And then we changed out some people. We brought a guy in who was from the UK, and his now wife was on the M&A team that bought his company at Lawson Software and brought him in from California, and they fell in love. I hired him as our COO, and he brought a bunch of new energy. I hired another guy some of you would know from Tarmac named Brent Kastner, is an incredibly ambitious guy. And it just, we just tried to get the right mix. So there was enough ambition in the business that we started asking how, not whether. Every time a question came up, like, could we serve the White House with this platform? And you want somebody who's like, yes. And you're like, but how would we do it? And I'm like, we'll figure it out. Say yes first. And that is a very important instinct that Optum will beat out of you. And so we either have to deprogram or find people who have other programming.
I want to allow time for a couple of questions from the audience, but I want to ask a couple related questions to that then. So, Sonny, there's a lot of Fortune 500 companies in this town. Does that help you, hurt you, or doesn't it matter?
No, it hurts a lot. Just sucks. I don't know. Part of it is culture. It doesn't matter what flavor of Fortune 500. You could be a pretty 500 like Target, or you can be like a more granola one like General Mills, or a more blue collar one like 3M. But it's all the same. You don't become a company like that in the categories that we have in Minnesota without an immense amount of structure. There's a reason why that structure is important. I heard somebody say that, one of the rich parts about Minnesota is that all these different companies share employees and all their management structures all share, and all these ideas are shared, but they're all useless ideas that don't apply to me at all, and hopefully won't apply to me for a long period of time. And so there's just an enormous amount of brain CPU being spent on things that don't create new things. They just operate existing things. There's nothing wrong with that, but it's just noise. It's just noise. It's like trying to shop at a store that doesn't sell your specialty product, and you just got to go through the shelves until you find this one little jar of whatever it is that you're looking for. That's kind of what it feels like here. And I think that we're the products of our environments, right? Whether there's no, in my opinion, you can create an environment to do whatever you want to. And if you flood the airwaves with all of this message of like, you're an L5 product manager with this responsibility, and here are your boundaries, and no, I can't take a meeting before that period of time, and you didn't give me enough stuff in this email, so I'm going to forward it to 5 other bosses so they all see how stupid you are. Like, all of that stuff is just stupid noise that takes brain power, and it takes brain power to filter through, and it's just a jungle of mediocre competency, is what I would say.
How do you really feel? Cora, what have you learned? Share something that you didn't know 4 years ago, maybe on this journey, that you've since learned in terms of growing a business like yours that the room might find helpful.
Oh, it might be helpful. I think so. So one of the things that I've found is, so first of all, in deep tech or hard tech, one of the things you need to think about is that the market that you're going after is much more, especially if you're thinking about the investor market, it's a much smaller pool than the broader kind of software investors. So you really need to think about your market of investors, and I do think of investors as a market, and you need to think about your market of customers. Going back to the Fortune 50, I mean, I don't think we've sold a single machine in Minnesota. So all of our machine sales, we just shipped 2 to Texas, we have 2 in Ohio. So I think it's important to not think inside this pond. And the moment that I realized that fundraising I needed to get out of Minneapolis was the moment that I found money. And I've also raised money internationally, so you have to think about, who in your investment, if you're thinking about who you have to make your caricature of who is your investor. Your investor is someone who should be able to understand your business, and get it with. It shouldn't take 10 slides. It should take 2 sentences. And think about what that pool of people, is. For me, that was people in the chemical industry, and they've continued to support Chromatic. Also people from the 3D printing industry, but mostly from the chemical industry internationally. I think the other thing, just going back to scaling, we've hit $1 million of revenue. It's the question about scaling and I think about it in a very, maybe it's too theoretical, but in a theoretical way, scaling means what you're creating a business engine, and where, if you put in another $1, do you get $5 out? And one of the issues that, everyone looks at, how big is your market? What's your TAM? Da, 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 da. We had an immense TAM, and we saw that with the number of customers who were interested. But when we said, well, what would it take for us to be 10 times bigger? The answer wasn't more marketing. The answer was actually improving our product and improving the tech. And so it's important to be able to recognize that, because usually most investors, if they say, oh, you're ready to scale, you're ready to hockey stick, they assume that all you need to do is be louder about your product and more people will hear about it. And that will scale you because that's cheap. That's a lot cheaper than saying, hey, we just need to work some things out in the lab. So I think just having that keen sense of what it will take for you to grow and make sure you're communicating that and make sure your investors are along for the ride, that they agree with the ride that you're taking, and that they're advising you in the right direction. It's just really important.
Thanks. Questions from the audience?
Good question. First off, thank you. With respect to just the topic, the header of this whole session, right? Scaling B2B tech companies, SaaS companies, specifically to Sunny and Cora. When you look at all these founders here, looking at our MVP or just a pre-rev, right? And you're looking at scaling, what would be some of the watch-outs, lessons, advice you could give with the top few when you're at the very early stage of your launch? And then when you're looking at your companies now, how are you scaling it? And what's the difference between how you're scaling now and how you were scaling right when you launched? What were some barriers to watch out? Just holistically speaking, not just from a technical solution perspective, but just various things that possibly could help all of us here. That'd be great. And also the follow-up part B to that is to Scott, from an investor perspective, what could you tell us, like, how, when you're looking at those initial investments and they're looking at launch, what are some things they did well and did not do well, or telling us don't do it would be good. So I'll hand it back to you.
Be succinct.
Yeah. Okay. I would say really recognize. So there's MVP, but there's also recognizing your beachhead market. So you can have a really big TAM, but really what's your beachhead market, and making sure that that beachhead market will convert quickly. So speed of conversion is really an important element when considering, whether your tech can survive. You need to have a really tight beachhead market with a very rapid uptake of the product to be able to grow it from there.
I think the answer to that question kind of depends on what you're trying to do. For us, we're trying to make something really stable where we want the average customer that signs up for Fulcrum to be a customer for 45 years. So we have a different threshold of what we're trying to build. But I would say that the lesson that I would go back in time and tell myself is that there is no such thing as a market. There's 1 billion markets. There's 400,000 markets. As we continue to make manufacturing better, potentially we personalize every market to an individual person. What democratization of technology is that we get smaller and smaller subdivided markets, and that's what we get today versus if you were in a product company 100 years ago, you probably only had 4 markets. And so I think for me, I thought too much about what VCs think about, which is what your TAM is. But from an execution perspective, you may make the wrong choices thinking that this market's too small, but it's likely just one of many, many markets. And so I think I made a lot of wrong choices trying to get more bang for the buck. But the biggest bang for the buck came from just understanding these people that all talk to each other. And they might not look like the same, and it might be a pain in the ass to build all the product for all of them. But the fact that they talk to each other, they trust each other, that's what gets you that once you have one little spark, it spreads everywhere. And thinking about it being too small is something that Scott's got to worry about, and whether I'm going to make it to the next one or not. But for me, like, it's only the one that's in front of you, and then you make it to the next one. And I would just stop prioritizing. Like, if you know you can do something, no matter how small it is, I would tell myself in the past, don't think about how big this is. The fact that you know what to do and you can get success just to do it. I spent too much time being like, is this worth it? Like min-maxing all these different things. If there's anything that you know how to do, that's worth so much, especially early stages.
Scott, you're going to get the last word, I think.
The whole thing? All right.
Probably.
So I think we invest at a certain stage. All funds are different. We're generally late seed, early A investor, so $500K to $3 million in revenue, and companies that have not spent much to get there. So generally tech-enabled firms that have been very capital efficient. That's by design for a lot of reasons I could talk about another time. So we aren't investing pre-seed. The mistake I see people make is not much. So it kind of aligns pretty well with what Sunny said. I think really getting in there with the customer not focusing so much on the product, but focusing on your richness of understanding of the customer. And I would say just being somebody who's outside in and not inside out in how you're designing and interacting with the marketplace. And the outside is the customer. Outside in means working with them and not just saying, how are you using our product, but like, how do you spend your day? What's your day like? Show me logging into your computer. How does that work? What are you worried about? What is your boss mad about? The best founders seem to do that well, and they keep their early customers, at least the ones that end up being a good fit, they keep them and serve them really, really well, rather than just focus on growth, and kick out a bunch of churn.
Are we at time, or do we have time for one more?
One more.
One more. Okay. Oh, sure.
What question should I ask myself if I want to make a world-class B2B SaaS product particularly?
I guess the question I would ask you is, why you? Like the pitch for everything is why this, why this, why now, why you? So if you can answer those three questions, it's why me at the end, I think that's it. By the way, that's the same question to ask if you're writing a novel or, putting a house a certain place or getting married or whatever. I think all big decisions have kind of that logic to them, or should. And if you don't have the logic and you're just chasing being an entrepreneur, that rarely works out. It sometimes does, but it rarely works out.
Well, I want to thank my panel today for sharing their wisdom and experiences with us. And thank you all for asking questions and listening. And we'll try to linger for a few minutes until they kick us out. But let's give them a